Hello and welcome back to London. I'm stood right next to the Bank of England. I couldn't get any closer to the policymakers, and UK GDP has come in slightly worse than expected, but much better than many of its European peers. So what does this mean for monetary policy from the Bank of England? Well, I've been to ETX Capital to find out. Okay, so let's drill down straight into these UK GDP numbers. Not as good as many hoped, but much better than their peers in Europe. What do you make of the figures?
I think it's quite interesting, to be perfectly honest with you. I mean, yes, the economy has not grown as well as expected in the third quarter. However, I think if you look at the economy's performance over last year, then it is quite a strong figure. Growth slowed more than expected in the final 3 months of last year. The figure was 0.5% versus 0.6% expected, which is actually up 1.7% in 2013. Now, Britain's economy grew 3.4% at its peak before the financial crisis, and it's actually 8% larger than when the Tories took over in 2008. So I think the IMF is forecasting growth for this year to be at around 2.7%. So I think what this means for the markets is interesting. I mean, we've seen that the pound has dropped against the euro and the dollar today. And I think what that is going to incur, it's going to mean that the Bank of England is going to hold back on raising interest rates for this year until they start to see wage growth pick up in line with inflation.
But why would the BOE hold back? Because you're right, 2.7%, the projection is quite impressive, right? So aren't we moving towards a more robust recovery?
We are moving towards a more robust recovery, absolutely. But the fact is that wage growth still isn't meeting inflation targets. And the fact of the matter is that a strong labour market, strong wage growth means a strong economy. And if we're not quite there yet, then they're going to be holding back on raising interest rates. One
of George Osborne's big pleas was that he was going to diversify the economy. Yet we're seeing still the services sector dominating UK GDP. We're still a Starbucks economy, aren't we?
Yeah, I agree with you, absolutely. And I think the services sector has performed rather well in quarter three. But yes, it is large, but it's not the be-all and end-all. You know, you look at the engineering sector, you look at mining sectors, you look at resource stocks in general. You know, they haven't performed particularly well in quarter three, and I think this is going to hold the markets back. You know, if we look at the weightings that these companies have within the FTSE, you know, they are heavily weighted. You know, with the problems that we're seeing with the falling commodity prices over the last three to 4 months, you know, I don't think the FTSE is going to get anywhere near the highs of 6,950 that it's tested previously. These are the things that are going to hold the markets back.
Yeah, are there any bright spots in the FTSE at the moment? I saw EasyJet had some good results, so they're obviously benefiting from the lower oil prices.
Absolutely. I mean, don't get me wrong, low commodity prices is not a bad thing for everyone. You know, if we look at the airliners, you know, they have performed particularly well because of low oil prices. We look at the tour operators, you know, people like Carnival, Thomas Cook, you know, these stocks are performing well. But unfortunately, they're not as heavily weighted within the FTSE as someone like the miners are. So, you know, it's going to take a lot more robust results from these companies to push the FTSE to new highs.
Yeah, so just finish off, what about the pound? Do you think that's going to come under more pressure now that any idea of a rate rise is just gone for at least this year, it seems?
I think the rate rise is gone for this year, but I think, does that put more pressure under the pound? I'm not sure, because if you look at the weakness of the euro, you look at the weakness of the yen, yes, the dollar is strengthening, but I think while Europe isn't growing, while the Far East isn't growing, I think the pound is going to remain at the level that it is against most major currencies.
Well, thanks to the guys at ETX Capital for having me. Stay tuned for more interviews and analysis here on Doug's Copy TV, but for the moment, goodbye.